The stock market is currently closed, and as of the most recent closing bell on Friday, July 17, 2026, DataVault INC trades under the ticker symbol DVLT at a price of exactly $0.3697 per share, maintaining a nearly flat performance over the immediate daily session, but masking a massive undercurrent of volatile activity. While most retail investors checking their watch lists on a standard individual brokerage account see a micro-cap stock languishing in penny stock territory, the shocking under-the-radar reality is that this small enterprise just claimed an exclusive mandate to process a massive tokenization system potentially valued at over $1 billion, entirely hidden behind their public face as an audio infrastructure outfit. This creates a fascinating disconnect that completely shatters the baseline expectation that microcap stocks under 50 cents are merely speculative shells with no real institutional commercial utility. When you pull up a basic trading chart on any of the popular investing sites, it looks like a typical high-risk gamble, yet the institutional mechanics moving behind the scenes show an explosive multi-thousand% expansion in top-line metrics that almost no one is talking about. This creates an immediate paradox for anyone interested in online investing, because what people believe they are buying is a struggling microcap, but what the data shows is a completely different infrastructure animal altogether. The general expectation among casual market observers is simple and predictable. Most people look at the ticker symbol DVLT and assume it is just another speculative corporate shell riding the coattails of technology trends to keep its listing alive, especially given that its stock price has shed roughly half its value over the last 6 months. If you open up your Robinhood app or check your account balance on the Fidelity trading platform, the numbers look grim on the surface. People assume that because a company trades for 37 cents, it must be failing to generate real-world commercial traction, or that it is bleeding out from constant dilution. The common narrative suggests that retail investors should stick to massive mega-cap assets like Apple stock or Nvidia stock, or perhaps outsource their allocation entirely to automated options like Schwab Intelligent Portfolios. But let us challenge that assumption directly. The reality is that the financial reality of this business does not match the dismal price action on the chart. While the market treats it as a dying penny stock, the underlying company is experiencing a staggering top-line revenue expansion, logging a massive spike over the past trailing 12 months to exceed $40 million. This creates a massive gap between public perception and actual fundamentals, making it a critical study for anyone seeking serious investment help or trying their hand at self-investing. When we analyze the recent market mechanics, the daily price swings reveal an intense battle between short sellers and retail momentum buyers. Trading volumes have spiked significantly on key news days, occasionally pushing tens of millions of shares through the market in a single session, far exceeding the stock's historical average baseline. This sudden influx of liquidity indicates that institutional eyes are quietly tracking the asset, even if major institutional investment firms are barred from establishing significant long positions due to strict market capitalization constraints. If you look at individual brokerage data on platforms like Interactive Brokers, the cost to borrow shares for shorting has fluctuated wildly, proving that market makers are experiencing severe friction when managing the order book. Short interest has remained a persistent dark cloud over the stock, driven heavily by research reports that accuse the enterprise of overstating its technical capabilities and pushing out overly promotional public relations statements. These criticisms caused a significant sell-off earlier in the year, leaving many investors trapped at higher cost bases. Yet, despite the heavy downward pressure, the stock has built a temporary floor around the 35-cent mark, showing that a dedicated retail community is stepping in to absorb the selling volume every time the price dips into extreme deep value territory. To understand why the price action is so detached from the corporate announcements, we have to look at the recent massive development involving a $1 billion asset tokenization plan for the Project Questral Edge computing infrastructure fleet. This initiative involves creating utility tokens to clear and manage access rights across a planned 1,000 decentralized edge data centers across the United States. The company has announced that it will split the processing revenues evenly with the infrastructure developers, utilizing its proprietary exchange system to handle the high-volume digital clearing. Furthermore, the integration with major systems like IBM Watson X adds a layer of structural credibility that standard penny stocks rarely possess. In an environment where macroeconomic pressures and volatile interest rates have made capital expensive, companies are forced to find creative ways to generate liquidity without relying purely on high-interest corporate debt. This makes the concept of asset tokenization highly attractive on paper. Retail traders accessing Robinhood stock trading or setting up long-term positions through Fidelity Investments are watching to see if these massive figures convert to actual cash on the balance sheet, or if they will remain unfulfilled projections. The trading activity suggests that while the broader market remains deeply skeptical, the massive expansion in reported revenue is forced to be reckoned with, creating a highly volatile trading environment. To truly grasp the tension between what this company was and what it claims to be, we must examine its structural history. The entity was originally established years ago under different branding, operating for a long time as WISA Technologies, an audio electronics infrastructure company focused on creating wireless sound transmission standards. The Acoustic Science Division still exists, managing patents for wireless sound synchronization and interference cancellation. However, the business underwent a massive strategic shift, acquiring data asset management platforms and officially rebranding to DataVault Inc. in early 2025. Today, the business model is split down the middle. They still maintain their legacy audio licensing, but the primary driver of their modern valuation narrative is their data science division, which focuses on artificial intelligence agents designed to score, value, and commercialize corporate data assets. They are trying to position themselves as the ultimate digital exchange where data is treated as tangible capital. This dramatic pivot from consumer audio to high-performance computing data management explains why the market is having such a difficult time pricing the stock accurately. Navigating a microcap stock with this level of structural complexity requires an advanced understanding of modern trading platforms. Investors who engage in active online investing use a range of tools to execute their strategies. Some prefer the simplicity of the Robinhood app or look for ways to accumulate tiny positions through Robinhood fractional shares, while others prefer the comprehensive institutional tools found on the Interactive Brokers trading system. For those managing broader portfolios, checking how these microcap allocations affect an overall portfolio mix on the SoFi trading platform, or balancing them against safer holdings like Fidelity ETFs or Fidelity mutual funds is standard practice. The choice of platform dictates how effectively a trader can respond to sudden intraday liquidity events. When a stock can move 20% in the matter of minutes on a single press release, having low-latency execution tools on an Interactive Brokers account or utilizing the automated risk parameters of an intelligent portfolio becomes incredibly important. Let us pause for a moment to gauge your perspective on this highly unusual setup. Comment below how many shares of DataVault Inc. you currently hold in your portfolio, or share your thoughts on whether you think microcap tech pivots like this are viable long-term plays or just short-term trading vehicles. Hearing real feedback from the community helps us map out how retail sentiment is shifting in real time. Looking ahead, the future trajectory of the stock relies entirely on whether the reality of their operational execution can catch up to the massive expectations created by their recent corporate announcements. There are two distinct scenarios that could play out over the next few quarters. In the bullish scenario, the initial phase of the Edge data center tokenization program goes live smoothly by the end of the year, generating predictable high-margin fee revenue that shows up clearly on their financial statements. If this occurs, institutional skepticism will begin to fade, and the company could easily see its valuation reassessed by the broader market, potentially driving the price out of the penny stock zone and attracting attention from larger funds that utilize professional fidelity wealth management services. Conversely, the bearish scenario involves execution delays, regulatory hurdles regarding digital token clearing, or further balance sheet strain that forces the company to issue more shares, diluting existing retail holders. The upcoming quarterly earnings releases will serve as the ultimate catalyst. Investors utilizing SoFi Active Investing or tracking the stock via Fidelity IRAs will be watching the cash burn rate and the actual adoption metrics of their data scoring tools. The margin for error is incredibly thin for a company